Let's just start with your thinking on where we go from here and why this could be even more protracted than some are hoping.
Well, it's very disruptive. When you look at the supply chain disruptions, consumers retrenching really throughout the world, and small business, particularly in the U.S., is particularly hard hit, and trying to rekindle that despite all these government programs. I think this recession is going to last throughout this year and probably into early 2021. We're going to see some very rapid declines, big numbers on the downside in the second quarter, maybe not as steep a decline in the second half, but I just don't see any revival until next year.
We've seen great efforts, of course, undertaken both on the monetary side and the fiscal side. What's your approval rating on what you've seen so far? Are we doing the governments and central banks across North America doing the right things?
Well, yeah, they're doing what they need to. I think it stabilizes the economy, but it doesn't really spur demand. I mean, people that are staying in their houses, that are really scared to go out, businesses that are contracting, and small business particularly, that it's very difficult to get money to. What they're doing is probably all you can do, but there's only so much you can do with monetary and fiscal policy.
What else do you think needs to happen other than resolving this COVID-19 health crisis?
Well, I think a lot of it is a passage of time, and when you look ahead, and I might just turn to that, I think there are a number of things that are going to be very different as we look ahead. And let me listen. I've got a list of 11 of them. I'll go through it very quickly. We cover them in our monthly newsletter, Insight. The first one is that we're seeing a retreat from globalization. That's been going on for years, but with the supply side disruptions, this plays into the hands of the protectionists who want to see a movement away from international vulnerability. Second one, hey, I'm at home now. We're going to see a lot more work from home. We're going to see less business travel. That works to the disadvantage of hotels and airlines, but it works to the advantage of telecommunications. And the telecommunications is really there. I don't think we've fully taken advantage of it business-wise, but we will. A third thing, we're going to see a lot more online shopping. Bricks and mortar stores are in trouble. And that leads me to another one. We're going to see industry consolidation, airlines, cruise ship, hotels, and probably retailers. We're going to see more infrastructure spending. A lot of pressure for this in the U.S. We need it, and it's one thing that Congress on both sides of the aisles can agree on, and they don't worry about deficits anymore. So we're probably going to see some pretty big programs, although it takes a couple of years for them to come to fruition. Consumers, I think consumers are going to be cautious despite all this federal money. People aren't necessarily going to go out and spend it. And next one I have, the seventh one, is low inflation, deflation. We're in an excess supply world, and I think we will, unless we seal off the borders, say around North America, and cut off the rest of the world, we're still going to see excess supply. And the eighth one is low interest rates. Coming out of this, deflation, very much the advantage of Treasury bonds, safe havens, and they go with low inflation or even deflation. But I think there is a problem for junk bonds. Many of them, particularly in the energy area, and of course the energy area is just getting killed, you know that in Canada.
Yes.
And even with the cutbacks, there's just too much supply, and a lot of it is floating. When it arrives, there's going to be no place to put it. We also,
right. I want to ask you, Gary, because
I'm sorry.
I just want to get in because people that follow you know that your predictions are uncannily accurate over time, including back in 2015 calling for much lower oil prices from a combination of factors, which leads me to wonder what you're thinking about oil prices now.
Yeah, I mean, they're low now. They could go lower. You have a lot of excess supply, floating storage that's coming across on the water. It's in oil tanks in Saudi Arabia. It's got to go somewhere. Prices could go lower, but it is going to drive a lot of producers out of business. And of course, that's one of the things the Saudis wanted to do. They wanted to push the American frackers out of business. a lot of them will go bust, and that's a lot of the junk bond problems. But those guys are very resilient. Prices, I think, eventually will probably revive to probably $40 to $60 a barrel. But you'll always have these frackers nipping at their heels. And of course, Canada is really getting killed. I've seen some numbers. I can't believe how low Western Canadian crude is selling. But this is a lot of pain and suffering for the oil industry. So there's going to be some severe disruptions, and I think consolidations.
And just before we lose you, I want to ask you about investing themes. I know that you think the market could leg lower from here. What do you think might be interesting to look at in April and beyond?
Well, I think stocks on the short side. We've gone through the first phase of this. It's very much like 1929. You had an initial decline of 48%, really knocking the fluff off the 1920s. Then everybody thought it was over. You got a revival, 52% retracement of that decline, but then a slide as people realized the depths of the depression. I think now depression and ultimately decline of the Dow Jones Industrial Average of 89%. I think in this time it's a similar deal. The first decline was really the realization of the virus and the concern, the fear. It's coming under control. It isn't going to go away soon. But the second phase is a recession. So I think the stocks are going to go lower. I think Treasury bonds are going to do well. They are a safe haven. The dollar, again, a safe haven. And commodities, I certainly, we're short copper, and I don't think any commodities are very attractive.
All right. It's great to have your thoughts today. Really appreciate it, sir. Gary Shilling is president of Gary Shilling and Company.